let's talk about preparing your day for divergence trading. So what do you want to do when you sit down in front of your charts? Now, the very first thing we want to do every day is look at an economic calendar for any potential high-risk news events that could interfere with our trading. The last thing you want to do is sit down and enter into a 5-minute trading setup, a 5-minute divergence setup, and then find out you have an interest rate statement coming up. Or even worse, there's an interest rate statement released while you're in that trade. Okay, so you always want to know if you have high risk events coming up, and this applies for any trading strategy. Also, check the news to make sure there are no volatile geopolitical events going on that could impact your trading. So, flip on Bloomberg, take a look, make sure there's just nothing really extreme happening out in the world right now, because obviously that could also have a big impact on price action. Okay, now you want to open your charts to the currency pairs you'd like to trade and the specific time frames you want to trade as well. And the higher degree time frames so you can perform a proper top-down analysis, as well as isolate key levels of support and resistance to look for your trading setups. Now, just for example, if we're trading, say, 15-minute or 5-minute charts, you're going to want to look for support and resistance on the hourly, maybe the 4-hour time frames. You can always use daily time frames as well, but just remember the range is going to be larger the higher degree you go, so there's more room for price to slip through those levels, especially if you're trading trend line breaks or candle patterns specifically to enter into the divergence setups. But it's always important to perform a thorough top-down analysis, really break price down from the weekly, from the daily, because you don't want to start to trade in one direction and then go back and see, price is starting to go against you, it's starting to get volatile. Then you go back and look at a weekly chart, and on a weekly chart you see a big hammer or something like that in the opposite direction of the way you want to trade. Okay, so it's just important to have an overall view of what's happening with a particular pair. So you want to do a thorough top-down analysis before you look to enter into your trades, just so you don't miss anything. You want to have all the information available when you make your trading decision. Once you've done that and everything looks good, start to mark off levels of support and resistance, so you can start to set up your trading zones. And those trading zones are where you're going to watch for divergence setups to develop. And you want to do this every day. Don't skip any of these steps. You want this to become a habit. You want to become very methodical with the way you approach your trading day, every day. Okay, so the very first thing we would do would be to look at our economic calendar. Right, here's an example. This is just forexfactory.com, and it has a nice economic calendar that shows the expected impact. If it's a red folder, it's a high impact. If it's an orange folder, it's a medium impact. And I've filtered out the low impact expected releases because I'm not really worried about that. It just clutters up my calendar here. So the very first thing we want to do is go through and look and make sure we don't have any extreme risk events that could be coming up that would affect our trade. Now, how you define that risk event depends on the time frame you're trading. So, for example, if you're trading off of a 5-minute chart, you don't want to trade during these red releases. Right? You want to be really careful about that. And obviously, even if you're trading hourly charts, or so, you want to be very cautious about trading around, say, the BOE inflation report and a speech here by the Bank of England governor. All right, so these are times in the market that can become extremely volatile. These are events that can break the normal cycles of human behavior, the normal habits of human behavior, okay, of traders' behavior. And that's how you have to think about it. Okay? So anyway, this is just an example of this is what's on my calendar for today. So now let's go ahead and take a look at a chart here. This is a price chart, and this is the EuroCAD. And this is the daily chart. Now I just want to look, let's just say we were trading coming into this day right here. Okay, so on looks like May the 7th. We would identify from the higher degree time frame that we were approaching this level of resistance. So we would mark off. We would mark off this level right around here that we were at a level of daily resistance. So let's just put that on here, daily resistance, so we know. And now I'm going to go ahead and just drill down to, oops, didn't mean to do that. Let's get that off of there. Okay. Now I'm going to drill down to the next degree. All right, I'm going to look at the 4-hour chart. Now, what do I see here on the 4-hour chart? We have some divergence developing. And you can see that it is developing even before this move, before it really qualified, by looking at price and see how price is moving higher. And here you can see the indicator wasn't keeping up. Now, this wasn't qualified at this point in time. Okay, we're talking about right here. Price was still rallying at this point. Okay, so price is still rallying into resistance, but we see that our momentum indicator isn't keeping up with that rate of ascent. Right now, I'm just going to remove these lines just to keep the charts a bit more clean here. Let's go down to the 1-hour chart. Here we are at the 1-hour chart. Now what do we see? Okay, at the 1-hour chart, as price is coming into this level, remember, we don't see the move yet. We don't see the move. We have price moving higher, but we also see the indicator here not keeping up. Not keeping up. Now we're waiting for a qualified price move. Right, so we have divergence. We saw resistance on the daily time frame. We isolated that level. We saw divergence on the 4-hour time frame. Now we're seeing it on the hourly. We see price spike, and then what happens? We get a qualified setup. We get a qualified setup right here. Price sharply traded down and broke the lows. Now we have our qualified divergence setup. At that point, we would draw our Fibonacci retracements after this swing, looking for this pullback. We would place the orders at the fib level, put our stop above the high, set our price targets. Now in this case, what will we target? What are we going to target here? You can target the 127 and be conservative, but we know we have a divergence on the 4-hour chart. We know we're at a strong resistance level on the daily chart. This is a situation where I would target the 162%. Remember, if we back up to the 4-hour chart here and we look at this divergence, all right, the target for this divergence alone is right here. Okay, that's a common target area for this divergence, for a correction. Okay, whether it makes it all the way down or close, you can see we've, in hindsight, you can see we've come very close to testing the low area there. We've actually tested where these closes are. Okay, but since we saw and identified that 4-hour divergence, okay, that also helped us to know what to target on this 60-minute chart. All right, we knew that target was well below the 162% Fibonacci extension of this hourly setup. Now, obviously, this is an hourly chart, so this is several hours that this took to play out. It actually spanned across a couple of days. However, we're talking about, if we use the 62% down to the 162%, right about 200 pips. 196, so just about a 200 pip trade. Now, just to point this out, this is current price action. What do we see happening right now? What do we see happening here? Don't everybody speak at once. No, I'm just joking. We're testing the level of support right here. Let me just draw this line across here. Okay, we're testing, and it's not a daily level, but it's a 4-hour level. We're testing this 4-hour support. Okay, we have, lo and behold, price moving higher, or price moving lower, excuse me, MACD cycling higher, and we're getting a strong rally right now. Hasn't qualified yet. Okay, but this is, now we're waiting. We've identified a level of support. We've identified a divergence. We see the price rallying up here. Now we're just waiting for it to qualify. If it qualifies, we'll draw our fibs, and we'll wait for the setup. If price pulls back, we enter. If it doesn't, we don't. We put our stop below the low and we target our extension level. And in this case, I would just target the 127. I would target the 127 because we have a price high right here. We have some price resistance. And also, we don't know if this is going to move into a double or something like that. So we don't have as much of a technical reason to target the second extension in this. Also, let's just go ahead and draw our fibs on this swing. Yeah, you can see the 48% or the 50% Fibonacci retracement falls right on this 127%, and the 62% Fibonacci retracement lines up very well with the 162. But we don't have enough of a probability here to say that price is going to trade through this first level into the second level. So we'll just target the 127 in this case. But then we'll also watch for some potential things to develop at these overlapping levels here as well. All right, so just different things we can do. But that's how you prepare your day. Okay, you isolate these levels and you watch for these setups to develop. Once the setups develop, then you take action. Prepare your day like this. Do it every day. Be methodical and consistent, and you will have a very successful trading career.